Let's talk to Shaun Richards. He is from Notayesmaneconomics, and we know the rules by now. I start the stopwatch and he has a rant. He gets on his soapbox. Without further ado, you have 6 minutes to rant. Specialised subject today, young Shaun, was interest rates in the UK and Europe. What are your thoughts?
Yes, well, this morning we got a reminder of something that we were actually told a while ago, but I think a lot of people have forgotten, which goes as follows. Mario Draghi, President of the European Central Bank, intends, if he can, to get out of his current term without ever raising interest rates. And so this morning saw him, in essence, giving a speech to justify that. So it meant that he had to take a few, what you might call, awkward turns. And this is something we see a lot at the minute, and so many central banks are, in essence, saying the same thing. What do I mean by that? People looking at the UK will have probably come across the thing of the Bank of England talking of a speed limit, 1.5% through the economy. They think they've got that from the productivity figures. Well, in another form, that's what Mario said today about the euro area. Probably won't get the same sort of media attention because they can't link it through to other areas. But 2.7% growth last year, quarter-on-quarter basis, 2.3%. If you knock 1% off of those numbers, actually, it might be worse off than we are, which then leaves things looking sort of slightly awkward because he's simultaneously telling you that the economy is really steaming on above what he'd call potential output. So in a way, fantastic. Except, of course, he's got a deposit rate of minus 0.4% and QE's ongoing. They've cut that back from 80 billion a month to 30 billion, but he's still doing more. He drew people's attention this morning to the idea of reinvestments over the next year. And for those not aware, this is a side issue. Bank of England's currently doing that, be doing some more today. But over the next year, ECB, 197 billion euros. So he's continually emphasising the point that we're going to see expansion in monetary policy. He hopes to get out of his gig without ever having to reverse it, which is in essence the message here to the next person is good luck, mate, because you're going to need it.
Okay, Mr. Carney. He did a London marathon in 3.5 hours last year, or maybe the year before, which I thought was extraordinary. Okay, that's a huge amount of training. Is he going to have that much time on his hands this year, or is he going to be too busy putting up rates?
Well, on the logic of what I've just said, I still think there'll be difficulties for him. I know the view is that the one's due in May, and the Bank of England have said that, but they've said this before and not done it.
Yep.
There's a whole list of speeches from him promising interest rate rises and then not doing it.
He's the unreliable boyfriend, as
Exactly.
I recall. Yep.
Exactly. And then we come to this issue of this is like a push me, pull me situation. Traditionally, the UK follows the US. If we do that, we'd raise, except we would have raised already if we were doing that, and we haven't, because we've gone down, then back up again. So then the pull continues to be the sort of black hole that's the euro and the ECB, which, as I've just said, if they can, intends to move on without raising them. And so this is the problem that Carney has in terms of the two situations. And I wonder if he also might want to get outside of his term without actually
raising rates.
Yeah. Keep saying it. He said that before. How might this be? Well, if we look at the shift, there has been some of a one. Now, of course, a lot of this is to do with the US, but we've gone up against the US dollar. That helps bring inflation down. So many commodity prices priced in that. There are various measures that the Bank of England used to use that you can look at the rise of the pound in this sense and look against it. That's far more than any bank rate rise he would do. So there is a sort of way out for him, assuming we remain in a phase that the dollar's weak.
Okay, so the next step, why have they brought finally quiche into the inflation numbers? I don't know if you read that.
Okay, yeah, I do. No, this is a real home territory for me.
And they got rid of pork pies.
What they try and do here is measure what the average person spends. There's a lot of difficulties with this. I think the number of items is 714, and they try across that to cover what people do. Obviously, there's a real issue here. I don't know. If cauliflowers are in the index and broccoli's out and you happen to like broccoli, obviously, hard luck, mate. But the principle is trying to measure the average basket. There are quite a few problems with it in terms of numbers. The initial response, people know I follow this, people contact me saying it was a lot and it was too many. To which I replied, actually, I think it's too few. There was an
So
example.
you'd have more in the basket?
Yes, because I think in the modern technological era, why not try and measure everything rather than faffing around saying A uses this, B uses that, because people argue, don't they? I mean, for those of us that can remember back, one of the more amusing things was the Smash adverts with the robots, where it seems like powdered potato, whatever you want to call it, that's back. Back in my days as a student, I certainly used it. I don't know if anyone else did. So these things circle around. Some people use them, some people don't. But if you took advantage of technology now, like the $1 million price project in the States, try and then cover everything. Then that takes away some of the arguments of, I only use A, B and C, someone else, D and E are in the basket and so on. I think there's a deeper issue here. Personally, as I said, it's an area I follow, which is I think the supermarkets game this. They know what's there. So where do you think they're going to put their price reductions or offers or things like that? I think their operations are much more sophisticated than the people who try and measure it. And if we put everything in, it would then stop them, and this is a perennial thing. People might have seen the recent announcements on the retail price index, something I feel very, very strongly about, which is that the establishment want to get rid of it. They come up with lots of reasons. Most of them they trip over their own feet and get wrong. But in essence, the reason they don't like it is that it has house prices in it. They want to keep those up. Why? Because their game's to keep house prices going higher. So they don't want it in the inflation measure, so they can tell everyone they're better off. This is a game that's gone on since 2012, where I've been involved in it, and on we go.
On that note, we've run out of time. Fascinating stuff, thought-provoking as always. Can't wait for your next rant.
See you then.
Nice to see you, Shaun.